Good morning, everyone, and welcome to the European crossover webinar. And let's go on and move in and take a look at for economic data that's coming out today. We do have a UK data coming out, unemployment rate, employment change here, claimant data. That'll come at the bottom of the hour. And then at the top of this next hour or the hour that we're in, we'll have ZOO, German ZOO numbers, and they're looking for quite the continued drop off here. As we move into the States, we do have dairy prices coming out of New Zealand. As we move into the States, 8:30 Eastern, we'll have New York Fed manufacturing, but really just very, very quiet activity as far as economic data here in the States. Very quiet. Just New York Fed manufacturing at 8:30 Eastern. Johnson Redbook, but that's something from way back in the day when that used to move markets. Long time ago, and I mean a long time ago. As I mentioned, UK employment data at the bottom of the hour, along with German ZOO numbers. Let's go and move this out of the way. Now we do have cable making a run here. Let's just do a quick recap. We did get some comments from Barnier that said a deal, I think it's a deal possibly by the end of the week. Sterling jumped in early trading on Tuesday and hit a 5-month high versus the euro after the European Union's chief Brexit negotiator said a deal with Britain over the terms of their divorce was still possible this week. Pound rose as much as 26.99 and by a similar magnitude against the euro to 86.90 pence after Michael Barnier said it was still possible. Sterling came off those highs after Barnier said a deal, while achievable this week, was more and more difficult. British currency enjoyed a huge rally this week. Last week, when London and Brussels said they would restart these intense negotiations to try and agree on a Brexit deal before Britain's scheduled departure of October 31st. Still a tricky sort here. I mean, we're still trying to make this run here. Let's see. This one's a difficult one. I always like to challenge something on the first round, maybe even the second go round. But the third round, I usually don't like to touch it. I mean, it's the same thing. I mean, when I reference that is lots of times when like I'll day trade, I'll give you, I mean, this isn't a perfect example, but the other day when dollar CAD was falling, I had a limit at 32, I think it was 32.07, and the market stopped at 32.11 and rallied up. Came back down, and then the second time it got to right at 32 or 7, maybe less than half a tick below, and I didn't get filled. So that's the second time. By the third round, get the F out of here. I'm not going to go on and sit there, and sure enough, it came down to 32.07, and then of course we fell all the way well below 132. So that's my point is, I'll challenge something. Of course, the first go round, the second go round, but the third go round, no, I don't want no part of it. And sure enough, that's what happened. As I said with the dollar CAD, 32.07, low was 32.11. Next go round, the 32.07 had hit, but I didn't get filled. And then the third go round, well, yeah, you don't want it by the third go round. If they're going to give it to you, then you don't want it. And so, I mean, it's kind of like say like a microcosm. But the thing is that they rallied them. Obviously, they rallied them up here, but I'm saying yesterday, rally them up, fade them again, rally them up, fade them. The third time now, you got to be very, very careful on this one. So I don't know. We'll see what happens. I mean, this one is a tricky one. I can certainly see the point that the bears make because it's so easy for this thing to fall back, and it can. But the point is the market knows where those stops are, just above this 127, and they'll see if they can keep the pressure up. We shall see. I don't know. I mean, I traded a couple of times on Friday and made just a few ticks. Well, like I said, I did pretty good the first one. The next one, I think I ended up closing out for like 10 or 12 pips. I wasn't going to stick around over the weekend, that's for sure. But then again, we did fade, fade yesterday. I mean, fade as we came in over the weekend. But one that you really have to be a little bit careful with. Kind of just holding steady, just kind of what I call kind of like digesting those gains, treading water. Dollar index, same thing. Dollar peso has played out as far as it's fallen apart. We talked about this, how, it took a long, we gave it the benefit of the doubt, and then we finally saw a pretty decent little rally after holding the 61% in 1932 all the way up to 1985. And then we came back and thought, okay, it's going to hold around the 1960. When it faded beyond the 1960, well, this thing, if it loses 1944, that's it. It's over and done with. And sure enough, that happened. We lost 1944. Now there's a challenge there, down to 1923.6. I still think they'll challenge that. That's the breakout level here. But it's over and done for the bulls. I mean, any rallies, this thing would have to dramatically turn around, just of sheer dramatic. After losing, anyone that had been bullish would have to give it up after once we lost the 44. That was your last chance. Alamo stand on the last thing. Certainly that opened the door for us to move much lower. And that's where we are now. I think it's over for the bulls. People can make the case that, there's 1960. Oh, you know what? Like I said, you'd have to turn this thing around. So you'd have to turn this thing around in such dramatic fashion to go bullish. We'd have to realistically probably have to rally above 1985 before you could say this thing would be bullish. 1985, which would be that reactionary high. Actually, it was like 1985.6 or something like that. But anyway, let's see here. We'll go to the cross rates. Anything else to me, it's just a selling opportunity. That's just the technicals. That's not even me talking. That's just the technicals, straight up. Like I said, we gave it the opportunity, and it actually eventually came through, holding that 1932, the 61%. And we saw a nice rally, but that really just once it got there, it just kept on fizzling back and back and back until finally it broke the back of any bull longs. I haven't done anything in peso in a long time, but I'm just saying is, it finally eventually came through, and then once it came through, it just fizzled out. We are seeing the euro versus the Kiwi still work a little bit higher. Nothing dramatic, but it is working a little bit higher here. The Aussie yen just treading water. We talked about this. I call it the fake news announcement. This whole trade deal is a bunch of malarkey. If it wasn't, hey, that's not me talking. If it wasn't, the Aussie yen wouldn't be here. So just that simple. If it wasn't. And we are seeing the sterling versus the yuan. Obviously, we're starting really make a little bit of a further move here. This was interesting. Let's go and take a look here. So, we've actually gone, look at that. We've gone past this 86.57, and here's your next key level right there. These touches, 87.56. You can see we've almost made it there. And you can see the touches coming across right in here. This will be interesting because, like I said, Aussie, like I said, is weak because it's not buying that whole, I'll play it as much as he likes to play it. This fake news, the fake news, phase one bunch of malarkey stuff. But I will say, we discussed this yesterday. We mentioned it also. We mentioned it yesterday, and then we mentioned it also on the daily roundup. Is bear with me. We'll go and get to that screen. We're still holding up here in the S&Ps. They did going back down, but I thought that Joe Perry, one of the analysts here with ForexAnalytix, and you see him on Bloomberg, he made the case. He said, hey, watch out for the, we have earnings, some earnings announcements, earnings this week. And I think that'll be, as I mentioned in the daily wrap up, I think eventually we'll pull down. But I think that those, where there's a miss somewhere or a disappointment will be the catalyst to, as I said, kick grandma down the stairs and let this thing go on and slide. So we're kind of holding our own here. But like I said, once again, if there was some phenomenal trade deal, this S&P would be trading above 3,000 if there was some real announcement. You see what I'm saying? We've come back and we kind of rallied on the anticipation. They get the old buy the rumor, sell the fact. We dip back, so they got anyone that may have been short, they're kind of holding them hostage. But like I said, I think that once we get up here, this will be a key level right here. You see this close right there on a 2 hour, right there. Yeah, actually it's holding it right there, 29.81. You see that? See the touches coming right here, 29.81. Doesn't mean you can't push hard, but I mean, I think we'll eventually work lower, but and it might be like an earnings disappointment or something they'll use as a catalyst to knock this thing down. Crude oil's kind of been yesterday's kind of a little bit all over the place. We did fade from that 55, but we're kind of all around, and now we're kind of a little bit on the downside here. Gold, tricky market. I mean, after it fell and we took out some stops, we came back, and I think it was. I would say good because I'm not doing anything with it, but I'm saying is I think it factored in, let me put it in, it factored in potential volatility and it came back, but it's interesting because it really, knocked a lot of people out with hitting these stops below 1480 in the spot. Now we came back a decent amount. We're kind of holding here. Interesting trade here. Interesting. After cleaning some people out, we're holding here. We'll see what happens. Let's go and move into the news, though. Bear with me. Okay, so dollar losing momentum versus the yen as trade deal and Brexit hopes face reality check. The dollar hovered below 2.5-month highs against the yen on Tuesday, failing to extend those gains as optimism over trade negotiations between the world's two largest economies and orderly Brexit exit from European Union start to fade. Well, that's what I'm saying about the fake news. And he likes to say it, I'll throw it right back at him. The fake news on this trade news. In Asian trade, the dollar eased marginally to 108.31 against the yen, still not far from its 2.5-month high of 863 yen marked on Friday. Although markets initially welcomed the phase one trade deal between the U.S. and China that President Trump outlined last week, a lack of details kept many investors cautious. Media reports suggest China wants another high-level meeting later this month to finalize Friday's agreement, suggesting that not all the details are now nailed down, said Alex Stanley, senior interest rate strategist at National Australia Bank. Market participants are conscious that previous U.S.-China agreements have subsequently broken down amidst misunderstandings among both sides. A Bloomberg report on Monday, citing sources, said China wants some more talks as soon as the end of October to hammer out the details of Trump's phase one deal before Chinese President Xi Jinping agrees to sign it. China's yuan remained relatively firm versus the dollar in onshore trade a day after it hit a 2-month high of 704.94. Sterling slipped from a 3.5-month high touched on Friday as last week's euphoria gave way to doubts over whether the timely Brexit deal could be clinched. The pound was last quoted at 26.11. Right now we're 26.59. A deal to smooth Britain's departure from EU hung in the balance on Monday after diplomats indicated the bloc wanted more concessions from Prime Minister Boris Johnson and said a full agreement was unlikely this week. Well, we've seen comments from Barnier say maybe they could do it, although it still seems difficult. Johnson said he wants to strike a deal at an EU summit on Thursday and Friday to allow an orderly departure on October 31st. If an agreement is not possible, he says he will lead the United Kingdom out of the club it joined in 1973 without a deal, even though Parliament has passed a law saying he cannot do so. Sounds like somebody I know. The Turkish Lira showed limited reaction after Trump imposed new sanctions on Turkey, but the currency stayed near 7-week lows against the dollar on concerns about a fallout from the country's incursion in northern Syria. In Asian trade, the Lira stood at 5.924 versus the dollar. Elsewhere, the Aussie and Kiwi dollars struggled for traction on Tuesday as traders wondered what, if any, progress was being made in Sino-USA negotiations. Like I said, proof's in the pudding, folks. While Australian policymakers again signaled they were ready to cut rates if needed. And on the morning bid, the optimism of late last week has reverted to caution on world markets, with global stocks stalling on Tuesday as questions mounted over the extent and durability of the latest U.S.-China trade truce and likelihood of a Brexit deal by Thursday's European Union summit. Tensions over Turkey's military offensive in northern Syria also simmered, although the lira recovered some ground for the 5-month lows Tuesday after Washington announced sanctions against Ankara. The currency caught a break partly on the feeling the sanctions, mainly against Turkey's energy and defense ministries, could have been worse, but also because Turkey's state banks have been widely seen intervening to cushion the lira's fall. More broadly, markets grew skeptical of the latest advances of the U.S.-China trade talks. U.S. Treasury Secretary Steve Mnuchin said on Monday that an additional round of tariffs on China import will probably be imposed if a comprehensive trade deal with China has not been reached by Trump's meeting with Chinese Xi Jinping at next month's APEC summit in Chile. The U.S. Third quarter's earnings is about to begin and reveal some of the damage from the escalation of the tariff row during the quarter. Wall Street stocks ended in the red overnight as Asia's major markets were also down first thing Tuesday. Shanghai stocks fell 0.5%, and Hong Kong and Seoul benchmarks were flat. Tokyo played catch-up as it returned from a holiday on Monday and rose more than 1% after dour export and import readings for September. China said on Tuesday its factory gate prices declined last month in the fastest pace in more than 3 years. Treasury yields turned lower again after the yield curve between the 3-month and 10-year bonds turned positive. Sterling gained on Tuesday as traders continued to bet that a Brexit deal would be reached by the European Union's summit or delay on October 31st. Brexit deal would be agreed. Not spending any more time on this, so let's move on. Crude just gently moving up. Let's move into the charts. So it says the euro spent Monday consolidated amid light activity attributed to the Columbus Day in the States, holding above 1020. Tuesday's resistance is 1075, confluencing with 1083, the 1080, which is at 38% of 881 and full 1414, with support at 980. So we're just marking time here. Right here you can see, but we are holding above the 1020, which is great. But 1075, confluence with 1083 is the resistance, and on the downside 980. So no real big changes as the market treads water for right now. We'll go and give it some room to test lower and some room on the upside in case we start to break out. Those are the main key areas. So let's go and move into the cable. So we are pushing here. We put in here that the cable slid back on Monday, challenging the bias chart support at 25.42 with a low of 25.17. So the bias chart support wasn't bad at that point. They said resistance is going to be 26.42. Well, we're above that right now. So we need to take a little bit closer look on this daily. And when we look as we started out the week, we're indicating that the immediate resistance was 26.92 followed by 27.43. So that's what we're going to have to go with. So we had 26.92. You can see that right here on the daily, right there. 26.92. So we're reverting back to the daily. And also 26.72 is a 50%. And beyond that, here's what we're looking right there. You see there? 27.43. Oh, let's go in. Okay, so it's going to be 27.43. And on the downside, and like I said, we got 26.92, 27.40. We've already tagged the 26.92. So tell you what, let's go and mark that off anyway. So it's 26.92. Right there. 25.85. I pull this down just a hair right there. You see that? 25.80. And let's go move into the Aussie. Okay, and so it says Aussie spent most of Monday on the defensive. The pair remained above support 67.25. Upside resistance is 68.09. Well, this is just, it's weak. And we talked about this yesterday. We said that, hey, look, only because of the slope of this downtrend line were we able to close above it. But even then, we're giving that back. But we did not close above the 68.09. So, but this still remains the same. 68.09, 67.25 here. No changes. Right there. No changes. And obviously bearish. We'll move on to the Kiwi. We do New Zealand dairy prices later on today. And boy, this Kiwi just not looking good. No changes here. You can see it's just trading in a very tight range. You can see here on the downside, still remains the same, 62.67. We're at 62.83. Upside 63.58. No changes. And with that, let's go move into the dollar CAD. So it says the dollar CAD rallied a few pips above Monday's bias chart resistance of 32.36 before easing back a bit. The pair may try for a run a bit higher with significant resistance coming in at 33.74. Support is 32.06. So I don't know why I put 30. I meant to put 32.74. So apologies there. So the resistance, if we were to push hard, would be 32.74. So let me go make sure this is clarified. Right here, 32 cents. We can see we had yesterday's bias chart. We just took it out by a few pips and we're kind of pairing back. But the resistance would be 32.74. And on the downside, as we mentioned, it's going to be 3206. Let's go on and move into the dollar peso. Now, we talked about the peso. Let me go and move into these comments. I was just listening to something about Bullard. Says dollar peso continues its downward slide to the breakout area 1923.6. Support is the breakout with a possible overshoot at 1916. Resistance is 1938. So it's 1923.6 with a possible overshoot to 1916. And on the upside, it's going to be 1938. So, like I said, we've tested the breakout, 1923.6, with possible overshoot to 1916. UK data there at the bottom there, on the doggone lady at the squawk is squawking her head off. I should just turn that volume down. Drive me nutty. God, I gotta turn this thing down. Hold on. This lady won't quit babbling in my ear. So anyway, dollar yen resumed its upward rally on Columbus Day. The buys chart resistance remains in place at 851, support is 788. So we had a buys chart and that kept it in check. So no changes here in the dollar yen. 851 on the upside, 788. Can we bump up above that? Yeah, maybe a little bit, but 851 is key on there. So let's just go on and really, if you think about where the SPOOs are, really the dollar yen, it's been what I'd refer to over the weekend as just a mild rally. It's kept things in, check. We'll move into the cash dollar index. The dollar index spent Monday's session consolidated with a minor upside bias. Resistance is 98.72, was supported at 98.14. We're essentially treading water. You can see here on the dollar index. So like I said, stretch up here, 98.72, downside 98.14. You can see that here in the 2-hour chart. Like I said, we didn't get very much movement here on Monday. So basically things still remain the same. You can see here. So no changes here in the cash dollar index, none. Now, like I said, what do you expect? I mean, Monday, we just basically, for the most part, with the exception of cable, we didn't see very much movement here in FX. Other than digesting, the fake news headline. Hello, Mont. Let's go move into the cross rates. We got that UK data, and we're not seeing any real changes here. Just going to move on to QEN. And you can see here, we're just pairing back here in the QEN. Let's go and change that to 2 hour. So you can see after, now this is a textbook gravestone doji, and you can see this market pairing back. This is where we see some decent volume. And if we do break a little bit lower, that's important there, would be 67.82. But this is some good volume coming in right there. It's been relatively tight range. We'll go with 67.87 on the downside, actually a little bit lower, 67.85. And on the upside, 68.40 for now, 68.40. Obviously still bearish. You can see we're coming right across here in the 68.40. And then moving on, let's go move on to the Euro Yen. Just right, real tough consolidation. I mean, it's just no real movement. As I mentioned, we didn't see that much of a big moves in FX yesterday. So we had 1968. You can see the market ran out of gas right there at 1974. We'll give it the room right there, 1982 on the upside. And on the pullback, let's take a look here. Really right there, 1905. All right, just below 1902. Let's go move in with the Euro odd. Well, this is kind of a little bit all over the place right now. You can see this here. Let's go and get a closer look on the 2 hour chart. Just trapped in a fairly tight range. right there. So on the bottom side, we're looking at 62.27, and on the upside, 63.34. Well, we're still with this door open to press higher, and we talked about as we came out of going into Asian analysis over the weekend that the initial target was 75.03 with the potential to 76, and that's where we're going to put it at 76 even for resistance. Going to the intraday. And there's going to be a let's go move this here. And the support right there is that little breakout area is going to be 74.66. That might be a little bit, let's see right there. 74.88. And looking here with the RCN. As I mentioned, we couldn't even break even higher up to the challenge of 74, as we came over the weekend. So, at least the market's perceiving it as quite the disappointment with this whole phase one business. On the upside, we're going to go with this is the actual level. If they were to, let's say SPOOs get a little bit excited, it's going to be the 74.02. And we want to give it some room in case we do break a little bit higher. And you'll know where the risk is. Not that we can't, we probably, looking at 51, actually it looks like 63, pretty decent resistance, but we'll give it the benefit of the doubt. So if someone's getting short, they know what the risk level is on this thing. On the support, we're just looking at volume right there. Volume support, which is going to come in right there at 72.92. And let's go move on to the guppy. We're going to give it a little bit of stretch here if we do push up, and it's going to be right here at 38.20, which will be just above those Friday highs. And on the downside, 36.02. 36.02. Right there. But as I mentioned, we get that this volatility with these Brexit headlines. That's what you have to be careful with. Moving on to the sterling versus yuan. And it's going to be right there. 87.56. We're not that far away either. Support's going to come in right there. See these touches coming in here? It's going to be, well, call it 86 even. 86 even. Seems like a long ways off, but the volatility we've seen, you have to go in and factor that in. So this is where your volume would come in right there, 86 even. Quite a ways away, from there, but you can see the kind of moves that we've seen here. One negative headline, and we'll be right back down there. Lickety split quick. Everything else, like I said, is relatively quiet. Crude is kind of just marking time after we faded from the 55. We're just kind of stuck in the middle here. The market is trying to figure out what it wants to do here. Gold, like I said, a nice move off of those lows from Friday. Same thing, trying to decide what it wants to do. Going to do. I think we may see a little bit later on in the week, maybe by tomorrow, as we see some of these earnings announcements come out and see if there's a disappointment and whether or not we pull back. We know that we talked about this is an important area here on the S&Ps, 29.81.5 in the cash. And that's all we have for today. But thanks for joining us here on the European Crossover webinar. We shall see you on the FX Daily Wrap-Up. And good luck trading.